Everyone enjoying the conference so far? Great energy. Can I just have a show of hands on geography representation? Just shout out the countries that you're from. India. Cambodia. Nepal, Switzerland. Vietnam, Germany. Taiwan, Indonesia, Malaysia. Singapore. China. Not bad, not bad. And the UK. Cool. And just a show of hands on who is with social enterprises, non-profit, on-the-ground kind of organizations. Okay. Who is an intermediary, a capacity builder, an ecosystem builder? All right. Who has the money here? The funders, the philanthropists, the impact investors. Okay, not bad. A lot of, some here, some there. Cool. So today I'm very excited to be moderating this panel. I'm Grace. I'm the co-founder of the Hub in Singapore and also the head of Singapore for Tonic, which is an impact investor network. And this panel is specially curated for you. I've got 4 amazing panelists, each of whom will be introducing themselves shortly. But just a quick scan. We have Rishabh from GSF India. GSF is the largest tech accelerator in India. We have Kelvin from Transist Impact Labs from Shanghai in China. Sati, who is head of Endeavor in Indonesia, for those of you who have heard of Endeavor. And we also have a guest panelist, Cliff. Who knows Cliff in this room? So I always call him the grandfather of us all, right? But he doesn't like that. So let's call him the godfather of us all. Yeah, the brother. And just because Cliff has been in, in the role of supporting and building capacity of social entrepreneurs for 10, 12 years now, he's with Unlimited UK. And the reason he's kind of plugged into the panel as of yesterday is because as we, the younger generation here, share our practices and challenges in supporting entrepreneurs in our respective cities, I would also want to bounce it off back to Cliff to compare some of these things with a much more mature ecosystem, which is the UK, and to a much grayer-haired man who is wiser, presumably, right, Cliff? So thanks for joining us, and thanks everyone for flying in from different countries to be here. Cool. So how I'm going to run this is a little bit different from the rest, just because I'm still hungover from last night. We're going to do a quick 2-minute introduction from each one. They're going to explain who they are, who they work for, and their approach in supporting social purpose organizations. They are here designed on purpose. You will see why later. Not only are they representing the 3 largest markets in Asia, but also their theory of change and their approaches are highly different. And then we're going to open up the Q&A almost immediately after I throw them a question, so that we get a sense of your needs, and then the panel will try to incorporate some of your questions into their own discussion. Do we have an agreement on that approach? Okay, fine, great. Good. So can we have a Rishabh to start us off?
Thanks, Grace. It's a pleasure to be here. Thank you for organizing this and having us. My name is Rishabh. I'm an operating partner at GSF India. GSF is India's largest technology accelerator program for startups in the country. We have a presence in 4 cities, Delhi, Mumbai, Bangalore, and Chennai. We've been around for a couple of years, and we have, our model is basically to invest in each company that we take into our program, and we run a 15-week program which is very mentor and workshop driven. And to wrap it up, we have an events business that allows us to showcase these companies to other angel and venture investors in the country. So we've been around 2 years. We've got about 40 companies. About 15% of them have social impact, which is why Grace asked me to be here and talk about our strategy. But our thesis is basically to invest at pre-seed, seed, and onwards for financial returns.
Thanks. So I'm Calvin Chin, CEO and co-founder of Transist. And we are also a seed stage impact investor. Based in Shanghai, we've now invested in 17 companies. Typically, we're the first outside capital, so we're very risk tolerant. Writing checks up to about 500,000 US in principally Chinese technology companies, but we've also invested elsewhere around the world. We're at the same time also building our own product, so that I think is a little bit differentiated than my other co-panelists. We are willing to meet with an individual entrepreneur who doesn't yet have really a well-formulated idea, much less a product or a company or even a team, and we'll incubate them. We'll provide them with resources, capital, mentorship, training. We'll help them hire. We'll help them find supplier and also customer relationships. And one of the more interesting programs that we're very excited about now is actually gravitating towards the GSF accelerator batch model. Actually, just at the end of this week, we'll be announcing a new program in collaboration with the Shell Foundation, and we'll be incubating batches of energy and clean tech related startups. And why I think this is interesting, well, we've done sort of the single entrepreneur SPO support and incubation to an organization which is starting to scale. Now we're actually engaging new sources of capital, which bring with them strategic expertise, brand value, and we hope to really activate other large organizations to participate and indicate to the mainstream entrepreneurs that this is an exciting and vital sector too.
Can we have some numbers, Calvin? How many investees? How old are you?
Yeah, 17,
how old is the venture?
17 companies now. We're about 2.5 years old as far as the active investing in incubation. But we have a program going back about 5 years where we've taken batches of social entrepreneurs and young interested entrepreneurs to the United States. And through those programs, we've probably engaged with about 1,000 different organizations now.
Okay, and just a quick one here. Any exits yet from this more traditional tech-based accelerator in your case and equity taking? Any exits yet?
We don't have any exits, but we've marked the portfolio to market based on follow-on investment rounds, and we're doing quite well. But it's all about liquidity, and we'll see how that plays out over time.
We've had 3 exits in the last 2 years. 2 of those 3 have been to Series B financiers who have cleaned up the seed and angel investors, and 1 was to Facebook. We had the first company that Facebook bought in South Asia from our batch. We did pre-seed and seed investment in this company, and soon after they came and bought the business out and moved the founders to the valley.
How much did they buy it for?
It was I'm going to tell you what was announced in the press, which is it was between $13 and $15 million.
Do you mean that the press is not the reality?
Sometimes the press can be, sometimes not. It just depends on who and how. I don't think there's a standard answer to that question.
Okay, really? So the price on the press is 15 million?
Yes.
Is that big or small in India?
That is, I think it's big given the fact that the company was 15 months old, and given that the company had only about $350,000 invested in it, so that in terms of multiple on capital, it was huge. But if you compare a $10 to $15 million exit in a startup economy like the United States, it's nothing. That happens in months sometimes, and sometimes founders won't even take that type of an acquisition offer because they don't think it's worth it.
Cool, thank you.
Hi, my name is Sati, and I work for an organization called Endeavor. We call ourselves a high-impact entrepreneurship organization, and what it means is we believe that not all entrepreneurs are created equal. Some of them have bigger impact to society than others. If you think about Steve Jobs, Reid Hoffman, who's the founder of LinkedIn. So what we believe is that these entrepreneurs are also in emerging economies or in places where a market fails. And so the way we work is we launch in a country, let's say in Indonesia. We've been around for 2 years. We try to select the highest potential entrepreneurs in the country and give them access to network and mentors. We have about 3,000 mentors around the world, 50 in Indonesia. And these mentors give them all the key ingredients that they need to scale up their business. I think the difference with my other co-panelists is that we look for companies that are already have a business model. Most of the companies that join us have a revenue of around $1 to $5 million, have been around 1 to 5 years, and usually they're on like the larger funding rounds. We don't give fund, but we connect them with investors.
Thank you. And is it true that Reid Hoffman, the co-founder of LinkedIn, is on your board?
Yes, we do have 300 people in the Silicon Valley area as our mentor network and investor network.
And can you name us some of the mentors in your 3,000 mentor pool?
Usually our mentors are people who are best in class in the given city that we work in. So, for example, in Indonesia, we have the CEO of Coca-Cola, CEO of Danone, CEO of all the telco companies, all the partners of all the consulting firm, Bain, McKinsey, KPMG, PwC, and they're all giving pro bono time to our entrepreneurs, and give advice and network and whatever the entrepreneurs need. So that happens essentially globally. So, for example, the Chief Strategy Officer of Microsoft, Orlando Ayala, who's the right-hand man of Bill Gates, is a mentor at the global level for Endeavor, and the CEO is a mentor in Indonesia. The CEO in Indonesia is a mentor in Indonesia.
And you have other people like Sheryl Sandberg and Pierre Omidyar, and I'm like, how do I be an Endeavor entrepreneur, right? Because as a startup entrepreneur, you really would want mentorship from some of these role models around the world, just for inspiration's sake, if not for anything else. So that's really their approach and their theory of change in supporting entrepreneurs. Cliff.
Hi, thank you, and I'm interloping from the UK. UK is now an honorary part of Asia, or whatever. So Unlimited supports absolute startups. Our theory of change, if you like, is that the talent is out there. The talent is in every community, including in the communities that don't have a bank of mum and dad to get started. So essentially what we do is provide the equivalent of a bank of mum and dad, and that's both seed funds, development support, confidence building, and connections for very large numbers of people to get started and take them through the first 3 steps, from thinking about it to doing it, market test, doing it to doing it full-time, committing, and doing it full-time to taking it the first step beyond themselves, maybe build a team or take an inward investor. The top end is investment readiness. So at the scale of this in the UK this year, 1,500 people at the entry stage, and we'll get between 50 and 100 invested at angel stage investment rounds. It's a model that's been taken up in a number of other countries, now 12 other unlimited style organizations around the world, most of them in Asia. Been very fast development here, thank you to AVPN. And we've now formulated a collaborative learning network, a thing called the Global Social Entrepreneurship Network, which now has 36 member organizations in 30 countries, just under 30 countries. Around the world. And this is really, this is not an empire building. We don't operate in any other country. It's very much as a shared learning network to try and speed up the development of this critical first step in the journey. I think if you look at commercial startups, you probably need 1,000 startups to find one that will get to venture capital level investment. And in the social sector, in most countries, we don't even have 1,000. So we're being very optimistic to think they're going to be enough to invest in.
Thanks, Cliff. And if you get a sense of the pattern here, we have an organization covering every stage of the life cycle of a social entrepreneur and enterprise, right? So Cliff and Unlimited UK works with people who are still finding courage to even step out to pursue an idea. It's a pre-prototype stage, idea to prototype, and they support thousands of them each year, right? And then, it probably passes on to probably pre-seed and seed and Series A funding in this kind of model, and then probably overlaps with Kelvin, which is around seed and Series A as well, but kind of large ticket size, about $500,000. And then the successful proven models, proven entrepreneurs would then be chosen to be Endeavor entrepreneurs under that model. So we do have different approaches across the life cycle or life stages of an entrepreneur. So before I open up to everyone else, I'll just ask the question that I think is the elephant in the room, right? Who funds them? Who funds them? How do they make revenue? How are they sustainable as capacity builders and incubators? Is that kind of a relevant question to everyone, or is it just to me? Okay, cool. Because everyone always asks the startups, right? and seriously, what about the intermediaries? So let's have a round of keep a pulse on that.
So I'm going to start us off. We we get funded by different limited partners. So limited partners can be one of three types of people. One is high net worth individuals who you also refer to as angel investors. The second one is other funds. So we see a lot of later stage funds who want to get exposure to seed and pre-seed in a market like India, want to work with us, get to see the deals at an early stage, and the ones that evolve, they come in later themselves. And the third one is institutional. So the institutional guys can be pension funds, can be endowments, and so on. But it's our business model is primarily the traditional venture capital model. Our thesis is that we use an accelerator as a funnel in terms of finding companies at the top of the funnel, and as they go through to the bottom, continue to put more capital.
So we're functionally similar in that we have a limited partner investor, but we have a single investor, an ultra high net worth individual. And our kind of model of sustainability...
Kelvin, what is an ultra high net worth individual?
It's a little bit more than high net worth, let's say. But ultimately, our kind of sustainable business model is also around driving returns. Fundamentally, we think that social purpose organizations, SPOs as the title of this panel is a new term to me, but these SPOs are actually not only the best way for sustainable social impact, in that these investee companies then can grow and continue without needing to fundraise from us continuously. But as well, we think the most attractive financial returns are going to be from purpose-driven companies. And in our market in China, we find that the biggest market opportunities are social challenges. So in all those ways, we think that the best early stage financial returns are going to be where we're operating.
Yeah, at Endeavor, when we've been around since 1997 globally, and I think for a new office, we are a donation fund organization, right? We have the ultra net worth and high net worth individuals to give operational expenses to Endeavor for the first 5 years, after which entrepreneurs that have been selected and have benefited from our network then give back in donation, in financial donation into the organization. However, a few years ago, because as I mentioned, 300 of our mentors are Silicon Valley based and a lot of them are investors themselves, they look into if Endeavor had been a fund, what would the return look like? And they found out that if Endeavor had been a fund since 1997, we would have made 2.9 times return on invested capital. So we're like, okay, so why are we a donation organization still? And so since 2011, we created a fund called Catalyst, which becomes a co-investing vehicle where we take no board seat, we follow the term of the lead investor, and we invest up to 10% of any $5 million round or over, up to $2 million. And the idea is that, let's say the LP or the investor will then share the return between themselves and Endeavor as an organization, and that would help hopefully sustain us over time.
So Endeavor's model is pretty funky, right? Because not only are you famous and successful and borrowing time and your networks for free, you also need to pay Endeavor $100,000 to be part of the board in that city. So they do have that pull power in demanding that their mentors and their board seats, board members pay to be Endeavor. To be involved in Endeavor. And I think, correct me if I'm wrong, Sati, but they do that because they want to mingle with each other. They want to meet Reid Hoffman. They want to meet Sheryl Sandberg. And that kind of, in that level of people, that is the return for them. You know, the 100,000 is like a rounding error, right? For a lot of ultra high net worth individuals.
I think the main purpose they want to, an Endeavor board member want to join is really for give back. So a lot of them are entrepreneurs themselves, but a lot of them are second generation entrepreneurs. Like for example, in Indonesia, a lot of them are the sons of conglomerates, and they feel like a lot of people would be as successful as them if they're given the chance, right? So the mission, for example, of the Endeavor Indonesia board is to find an entrepreneur from Indonesia that are self-made, they said not second generation, and hopefully not in natural resource sector. That's sort of, that is our goal.
We started off with a chunk of money from gambling. We're gambling based. our national
Tote
lottery
board, tote
distributor.
board.
Our national lottery distributor, and for the first few years of our life, that's what we were. We were an endowed grant-making organisation. But when we discovered that actually there was far more opportunity out there than the endowment would pay for, we started expanding it, and the endowment's now a minority part of our income. And we essentially sell the benefit created by startup social entrepreneurs to government, trusts and foundations, and corporates. And they buy into this for different reasons. So, for example, Santander, a retail bank trying to become the small business bank of the UK. So they reckon that new social enterprises are the sort of sparky, attractive end of new business startup in the UK. So they back us to do a very highly public awards program for them. Telefonica wants attractive mobile apps to put in their premium listing as a mobile phone company. So they fund an incubator with us for tech for social good. So there are different motivations, but I should also say the great majority of our work now is not done by us. This is a really nice gig if you can get it. So we coach lots of other organizations to do our work, and they put their money in to do our work for us on their behalf. So for example, half the universities in England now put their own money into sort of mini unlimited versions, and we've demonstrated to them the metrics where it's worth it to them. Their students are more employable, they get a better student experience, it helps with research, it helps with academic studies. So that was, we had to do some front funding to prove that sort of thing, but it's just proving to each sector that startup social entrepreneurship pays them dividends.
You started with, Unlimited started with how many percent of big society's money, and now how many percent is grant?
We started, it was 100%, and now it's, I think this year it's 38% of our income, and it will continue to decline, partly because investment returns aren't what they used to be, and partly because we are managing to secure other resources.
Cool. So in that range, we can see a diversity of funders and why they would fund a capacity builder, government to corporates, mentors themselves, one single ultra high net worth individual, and a couple of angel investors and VCs in Rishabh's case. And since already 4 people have asked me today, how is the hub funded? I'll also share, just to add on to the diversity here. We started as 90% membership model, so we charge the entrepreneurs who would then pay us to belong to our community and get access to investors and mentors and stuff. From that 90-something%, in our second year, it's down to 68%, and I want to push it down further to 45% of entrepreneurial membership money, and diversifying it with larger ticket items with governments and corporates who want to also grow the ecosystem. So we are all on our own trajectory in diversifying revenue models and creating our own sustainability loops so that we can exist for the mission longer. And also what's interesting to point out here is that only Transist and Unlimited UK here would call themselves a social impact incubator. All right, or a capacity builder. Endeavor and GSF don't position themselves as that. Although you want to start an impact fund, can you tell us a bit about that?
Yeah, so I think over the last couple of years, I mentioned we had 40 companies. We've had about 15% of the companies that we found have been leveraging technology to solve large impact problems. This has been in healthcare, in urban planning, transportation, and in a market like India, those are real large social problems. And this was accidental, to be very honest with you guys. And what we realized along the way is that if accidentally we stumbled upon this, if we did this in a focused way, then we could sort of take it to the next level. And from that evolution, we've decided to launch a Tech for Impact accelerator program that uses the same mentorship, funding, demo sort of model, but for impact-based tech businesses.
Are you using the same pool of capital? You have the same mandate from those same partners?
So actually, that's a good question. That's one of the questions I'm trying to find an answer to this week here in Singapore. Traditionally, we've used the limited partner model, but we are a little divided on how to go about a source of capital for a program like this. Would we want to consider grant options? Would it be something that's debt related, or would it be a sort of hybrid model? We've had a lot of discussions with people in this space, but we haven't reached a conclusion as to what's going to work. So actually curious to hear your inputs, any thoughts that you might have for what you think might work. I mean, maybe from what you see in China.
I mean, from my perspective, I think you make the case first to the traditional LPs, especially since you're managing their money already. You've established trust. You have the track record with 3 exits. I think, as well, there seems to be an inherent conflict of interest if you're taking time to manage somebody else's money while you're also managing theirs. So I think you have a strong case already. But ultimately, I think you've got to make the stronger case, which is that the companies out of your Tech for Impact accelerator will have the opportunity to deliver returns on par, or in our case, we think better than traditional accelerators.
Yeah, there are also, if I just make a call out, there are also a lot of interesting people amongst the audience. We've got a whole Thai mafia gang there, Sunit and Watanan, who are the nodes and ecosystem builders in Thailand. We have Lawrence and Susan here, UBS, the Lian Foundation and the Lian Center. Kevin and, he left, the BMW Foundation guy. But there are also a lot of intelligence in the audience that we would like to tap to. So. Okay, now I'm just going to open up to everyone on some of the questions that you want to be surfaced today and to be discussed by the panel. So anyone, just shout out your name, where you're from, and we'll get a sense of that. Yep. Yeah, sure.
I'm the other BMW Foundation guy, and my name's Ryan from Berlin. One of the things that we're just looking into right now, we've got a whole bunch of extra space, and very selfishly, I would like your input because I'd like to start a small incubator for social purpose organizations. And as people who've all done this before, what would be your advice for me, as someone who's going to be able to have 1 or 2 teams in at a time with this very small amount of money backing behind them?
Thank you. What's your name, please?
Ryan.
Ryan, thank you. That's not a very Germany, because you're not. Anyone else? Yeah.
Just from the UK, but based in China. Question for Cliff: what, in your experience, has been the sort of most common challenges in all the different markets you've set up Unlimiteds? And what are some of the major, perhaps the most significant differences you've seen in incubating social purpose organizations?
Do you mean the challenges in setting up Unlimited itself? No, the challenges in supporting local entrepreneurs.
Yeah. What are the differences, the cultural differences, or?
Great question. Next, yeah.
From Density Venture Capital India. I'm curious to know how you define success. And secondly, a question similar to the previous one. How exactly does incubation vary from one sector to another? I mean, I think...
Okay, so his question is, how do you define success as an incubator, and whether the theory of change should be vertical, should be sector agnostic or not, right?
Or you have to tweak from one sector to another.
Industry to industry.
Yeah, working with an entrepreneur from one sector to another.
Yes.
Yeah, Simon based in I mean, how do you meet the best ideas? I mean, how do you find the best ideas? Or how do the organization come to you? How accessible are you? What are the best practice to scout the best ideas?
Great. Anyone else? Okay, and then we'll have another round later. So a couple of really big questions there. So anyone can pick on anything except for one targeted one for Cliff.
I can start us off and try to answer part of yours and part of yours. So how do you define success for us? I think the first thing that comes to mind is survival equals success. And what I mean by that is that if our companies are still around, if they're able to go out and raise further rounds of financing, and the values of these companies are increasing, then they're successful, right? We've been around for 2 years. We have 40 companies. In 2 years from now, I have no idea how many of these will still be around. How many will shut down, how many will close. Sometimes companies fail after raising Series A and Series B as well. So usually our metrics are around valuation and survival. That's one. Your second question was around how do you customize from industry. So we are tech focused in the sense that our main thesis are around mobile, around cloud computing, around big data. The way we choose to customize is that we have a massive mentor network, not as big as Endeavor, but in India we have a 500-person mentor network. When we select a batch of companies that comes into the program, we will look at what domains they're in, and then we will try to customize from that mentor network to bring the right people in to run the workshops and to work hands-on with these companies. So it's templatized to a certain extent, but customized to a certain extent. That's how we try to do that. And just a quick one to answer your question. How do we find deal flow? We leverage our personal networks, social media, startup events, co-working spaces, anywhere and everywhere that we can find entrepreneurs. And in India, this is a real problem because it's huge. They're everywhere. And how do you go about doing this? We actually, when we were looking at setting up an accelerator, we said, okay, should it be in one city or should it be in multiple cities? And we chose to go with a 4-city model because you see different types of entrepreneurs and industries prevalent in different cities. So if you look at Delhi, Mumbai, Bangalore, and Chennai, the traditional industries that have been around and successful, and as a result, the entrepreneurs that come out and build, solve problems in those industries are different. So you need to take a regional approach as opposed to a centralized approach. So that's our view. I don't know if you guys will.
Any thoughts? Maybe I'll answer Ryan's question. Actually, we recently hosted BMW Impact Ventures in Shanghai too, so been thinking about similar questions. To me, I'd answer your question about what you should do with this space and thinking about supporting SPOs by thinking about what your primary goal is. So is your primary goal to learn as much as you can? Then I'd probably encourage you to have more than one organization in there. Is it about maximizing the impact of that, whatever companies are in there? Then you're probably going to need to think about what sort of resources those specific companies need. But in any event, I think you want the right partner to execute that, somebody who's on the ground who has a lot of experience with those kinds of organizations and with the mentoring and other support that you want to facilitate.
I think I want to answer the how do we define success. So at Endeavor, because we believe in building ecosystems, right? How do you sprinkle those sort of mentoring, sharing mentality outside Silicon Valley and transfer it in places where it's not well recognized. So in the tech sector, like in Indonesia, maybe in China and India also, the tech sector, everybody gets it, right? Information flows freely, et cetera, et cetera. But in the more traditional sector, like F&B, real estate, these areas, people don't understand what mentoring is. So for example, one of our Endeavor entrepreneurs in Indonesia is in the low-cost housing market. He's 29 years old. He started off selling cooking oil on the street. And now he has a $4 million business. And his knee-jerk reaction is to go from low-cost housing into real estate, right? To build hotels and big apartment buildings. And so we found him through our referral, which is the other answer. That's how we found deal flow, through referrals. And quickly, we link him up with probably the second largest real estate mogul in the country, who could then advise him to say, don't go into real estate because you will be competing against me and you will fail, right? Go stay in the low-cost housing. That's where the market is. That's where you're good at. And he's a happy bee now because he has this guy as his personal mentor, right? And that's sort of the value of connection. And then, of course, capital towards the end. But
can I jump in on that?
Sure,
I love your perspective. Endeavor has this long-range view where today's entrepreneurs are mentoring the next generation.
Right.
I think that's, in a lot of markets where we're trying to build new ecosystems, everybody wants their own Silicon Valley. Silicon Valley took like 40 or 50 years to build.
Correct.
And, it's a lot of hard work day to day.
But I don't think it will take that long, right?
No,
People say Indonesia is about India 10 years ago or something in terms of the tech space, but I don't think it will take us 10 years to get to the same place, right?
Yeah.
there's an accelerated learning there, hopefully. And so so that's our success, is when there are those multiplier effects happening. There's role model, and these role models then become the next generation, become the mentors of the next generation. Gary's asked about success. We actually have some kind of success out there that are examples. We have a few of our companies listed already in NASDAQ, now worth $3 billion. There's a company called Texas in Brazil, who's an Endeavor entrepreneur, who's now the revenue is $1 billion. We have an entrepreneur, Endeavor first ever entrepreneur is called Wences Cesares. He's the son of a sheep farmer in Patagonia. He joined Endeavor in 1997. Nobody wanted to give him loan at the time. He went to 30 bankers. Endeavor helped him get funding from the US, and 3 years later, he sold his company, Patagonia.com, which is the first online brokerage company in Latin America, for $750 million. So, and now he spends 2 hours, I think, of his time every day to mentor. He lives in Silicon Valley now because he understood the value that these things bring for him, and for us, that's success.
Can I just interrupt over here? I don't know if you're sensing this, but it looks like all these big successes are coming from the 2 tech people, right? Who are not impact people, you know? Do you sense that? They're on NASDAQ, they're acquired by Facebook. So, I mean, there's this question here that are venture philanthropists and impact investors too limited in where we look for investments? Correct? Do we look for investments and deal flow from tech incubators that may also have 15% of impact ventures, but who will never call themselves a social entrepreneur? So I think there's a question here in, are we too limited? And there's a question on intention versus impact, right? For the 2 decades that the social entrepreneurship movement has evolved, it has always been judged upon the intention of the social entrepreneur or the founder. You know, is your social mission higher or on par or lower than your financial mission? If your financial mission is higher, then you're not a social entrepreneur, right? That's how we have been defining what a social entrepreneur is. But now there is a new trend that is, Rockefeller is funding a study on whether we are looking at this with the wrong lens. Whether should we look at impact, the end result of the intervention of an enterprise or the entrepreneur rather than the intention. Would love to hear your thoughts on this, if anyone has any. Should we look at intention or impact? Anyone? From the audience, from the panel? Yes.
I'm just an audience member, and I have no affiliations. You might remember me as Darth Vader from last year. Inside joke. From everything I've heard today, about social entrepreneurs and how long they've been around, and social entrepreneurship, you mentioned 20 years. I mean, if you're talking about impact, one of the key themes that I'm hearing over and over again is that patient capital should be patient. So we should give social entrepreneurs a longer time frame than we might do a traditional tech or for-profit entrepreneur to define success or to achieve success. And if that is typically anywhere between 3 to 7 years, then we're probably talking about 10-year time frame. So I think the track record for social entrepreneurs in terms of their impact is actually pretty short. So, I mean, what can you look at other than intention at this stage? Because real impact in terms of achieving their ultimate goals, we don't, how much of a track record do we really have? That's a question really more than anything else, but it goes to your point.
Okay, I mean, there's a flip side here, right? Is it that the track record is too short? 10 years is too short? Or is it that social entrepreneurs are too slow?
Oh, no. Well,
which is
it?
But Grace, I would just say to you, if you want to see what happens if you buy social impact at big scale without looking at social intent, just have a look at the public service outsourcing industry in the UK, which has been an utter, unmitigated disaster. Because all they wanted to do was rip off the government, and they have ripped off the government, and the public services are crap, and the government is out of pocket. Or look at the pharmaceutical sector, okay? Pharmaceutical companies, they're making drugs which save lives and extend lives. So surely they're social, aren't they? That's social impact. But there's only one of the entire world full of multinational pharmaceutical companies that hasn't had a fine of at least $1 billion for malpractice. So you put healthcare in the hands of people who don't care about intent, just care about the impact on the sales. And what you've got is, well, what did GSK do? For 8 years, they held back evidence of risk of death to children from one of their top products. You cannot just go on impact. You've got to go on intent and commitment as well as the impact. There's no point in having intent with no impact, but you go with impact with no intent, and that's what you get.
Okay, that's confusing. So are you in the school of thought for intent or impact? You can only choose one.
I want both. I'm sorry. There's no doubt at all about it. And I mean, there's a G8 process going on at the moment on social impact investment, and that is looking beyond what is traditionally called a social enterprise. It's looking at profit distributing businesses which achieve and are also committed to social impact. And the reason for that is that we've looked, and the groups look really hard at the examples around the world. If you just have one or the other, you either get nothing or you get disaster. You have to have these two together. If you put powerful tools in the hands of people who don't have the right intentions, you get bad stuff. If you put the same tools in the hands of people who have good intentions, you get fantastic stuff.
Right, but we are assuming that the impact is positive in this sense. So
well, this is the thing that I think one of the social impact industry's big failings is they only look at the intended impact. Now, I come from a healthcare background. I want to look at the side effects too. It'd be very easy for me to manufacture very, very cheap, low-cost mosquito nets that mean everybody in the world can get one, but I've used child labor to make them. That's how they're cheap. You've got to look at the wider frame of their. Your impact is your full footprint, not just the thing you intended to do, but every result that comes out of it.
Can we just have a word from each of you, intent or impact? Quick one.
One thing I learned is you don't say no to grace. That's what we all agreed. Impact is always positive?
Yeah, you're assuming it's positive impact. So do we fund and support and identify people based on impact or intent, positive?
Well, at Endeavor, we don't, like you mentioned, right? We don't, we're not a social...
One word. Intent or impact?
No. I'm saying no to grace. I'm in trouble. I can't answer that.
Okay.
So in the interest of disagreeing, I love where Cliff's talking about having and wanting both, but if you force me to choose, then I think I have to choose him. I have to choose impact. Because historically we've seen, and we still see, a lot of very well-intentioned organizations and people who will never amount to anything. And so as an investor and as a participant in the ecosystem, as a consumer, as somebody who gets exposed to products and services out there, I'd much rather at this point take my chances with people who come to me and I sort of believe their intention, but they're actually going to do something, than these very well-intentioned people who won't be able to accomplish anything. No.
So you're saying the end justifies the means, but then you said
yes.
Only if the means is good.
No, the thing
No.
here... Yeah,
I'm willing to take a chance on
okay.
corrupted means with the better probability of some ends.
For example, Google, very impactful, right? So far, net positive so far, right? They will never call themselves a social enterprise, And because of that, they wouldn't necessarily attract the impact investors and the venture philanthropists. You see what I'm getting at? But the impact is obvious.
Absolutely.
Free information access to everyone.
Or in China, Alibaba, Jack Ma, created 10 million jobs.
Correct.
I mean, we go around talking about social enterprises that create a couple dozen jobs like they're like some sort of success story. 10 million jobs.
Okay, Rish, intent or impact?
Impact.
Okay, impact. On the fence, can I have a show of hands in the audience? Intent.
I would say intent too.
Impact? And the rest? Yeah, those who want to say.
Can you really have a sustainable or successful impact without the intent? I mean, we're not talking about just about creating job, right? We are here talking about social impact, right? Improving the living conditions of people, right? So I think you can get an impact, but you need to have an intent.
Sure, and I'd go even further than that because I'm a technology optimist, and I believe, look at me, but so I figure like, even in Cliff's example, so we're getting to a point where these large pharmaceutical companies will be punished by the market, absolutely. And it is the role for all of us as consumers, as citizens, and as people who participate in technology with transparency to punish those companies sooner. And so when you think about sustainable impact in the long run, even for these traditional for-profit companies, we've got to hold them accountable, and we've got to make sure that their intention is good.
You look really uncomfortable, Cliff.
It is really, really expensive and inefficient to have companies that intend to do bad and restrict them with regulation to make sure that they don't. That's a really ineffective.
Which companies intend to do that?
Well,
What kind of companies intend to do that?
most of the pharmaceutical. I mean, the only one that didn't, interestingly, is Johnson & Johnson, which is still owned by its founding family and have a very strong religious intent. They would not do that, so their intent is locked into their faith. If you look at what the banks have done in the West, you know, it's just an appalling state of affairs. And, you know, so they pose more and more regulation, and then you get into the situation where they're too inefficient to operate. So you know, to me, the future is what is emerging amongst certainly younger people in the population across the world, including here in Asia. If you ask people under the age of 30 in Asia what the purpose of business is, they say to benefit society. And that combination of intent and impact is what we want to see. And I don't see them as in opposition at all. In fact, I cannot understand why anybody would want to go out of their way to harm people to make money because, you know, well, okay, so you have some money, but you die a really terrible death, don't you, knowing that you've done bad to the world.
Absolutely, and I think, so it's not just by regulation that I think those companies will cease to exist.
Okay, sorry, I have to cut you off here for that lady, and then we have to move on. Yep.
Hi. I'd just like to ask a question because I hear time and again from the speakers that you are looking at delivering financial results. How do you keep sight of the social impact of the firms that you invest in? If let's say today I am a non-profit, I want to do a social, I'm a social venture organization, it seems to me like at the end of the day, you are evaluating me based on whether my company has financial returns, and that is the success. I don't sense that there is much emphasis placed on the social impact of who you invest in, because right from the start, I guess like Kelvin's company, Rishabh's company, you are not a non-profit organization, so you have to make money, right? Am I right?
I just want to clarify that whether you're a non or for-profit doesn't validate whether you're a social enterprise, okay? The non or for-profit is just the treatment of the profits, the surplus. If you declare dividends back to your shareholders, then you're a for-profit. If you don't intend to ever declare any dividends, but still make a healthy margin, you are a non-profit. But in whichever case, you do want to make a margin. You do want to have a surplus.
I think my terms are not totally correct. Okay. But I think my question is that how much emphasis do you place on the social impact eventually?
So personally, while we talk about our performance in financial terms, we screen for all our opportunities on social terms. So we wouldn't invest in something that we didn't fundamentally believe that their core product or service delivered, anything but positive social impact. So we're the kind of organization, like I get where you're coming from, but like we're just not looking at deals that don't have social impact. So even if we talk about measuring financial outcomes, it's only because we've let in through the door only social impact driven companies.
Been working on this through the G8 task force for the last 6 months, and sort of scouting around as to what a realistic system is going to be, because social impact is so diverse. People try and trade social impact off with financial impact, but money is a currency, and social good is a commodity in that its value is in the eye of the beholder. And different impacts for different people. So where we've come to is we think that something rather like the B Labs, B Analytics impact measurement system is likely to be, that's the sort of thing that will be the future, alongside a verification system of impact audit, which I guess I was talking to SRI earlier on today, and I think they're closest to that. But it'll be something built out of that. And certainly for us, you know, for all of the people who are looking like they're going to be high achieving, we will ask them to make sure that they've picked a small number of indicators of social impact which are really meaningful for them, not just for the benefit they're creating, but also for their business model internally. Because if you can internalize the social impact into your business model, it's much more likely to be successful and you know, sort of written through the stick of rock, if you like.
So can I follow up on that question? So to what extent do you see the B Labs analytics being something that mainstream corporations will also be held accountable for?
Yeah, exactly. Because I think what's likely to happen, if we move beyond the sort of asset-locked, you know, non-profit end of the social enterprise spectrum into social businesses, and there's a very strong stamp of, you know, look, these people have achieved this, and it's verified, you know, it's got an impact audit to it. Why wouldn't companies that want to attract better consumers want to start adopting that as well? I'm all for that. And any system that incentivizes the mainstream of business towards more pro-social is a really good outcome.
Yeah, if I can push that further, I had this conversation like a year ago with some friends on theories of change, and we're saying we as a society, we are the ones who have created the rules and regulations to enable private sector to exist. Yet, you know, we let them now ride us, right? So for example, imagine, wouldn't it be wonderful to turn the argument in its head and says, if Coca-Cola is going to release a new product, not only do they need to price that product according to what the cost plus margin is, but what would the effect be to society and actually put that, you know, in the price of the drinks, right? Shouldn't they be accountable to potential obesity that might happen through their products, right? So we haven't really thought of that. We always sort of, you know, the private sector are there and we are following their rules, the rules that we as a society created so that they could exist. So.
And we have, what, 5 minutes left? So I just want to touch on two more things that are current trends that are being discussed globally. One which is, in the social impact investing space, the solution is more important than the organization. Okay? So for example, when Wendy found the model for Teach for America, anyone familiar with Teach for America? Where they place the highest performing students to become teachers in the poorest places in America, right? And they have amazing traction and a lot of funding, but she was never about let's grow Teach for America globally, let's scale or start franchises or branches globally. She was more like, okay, this is the solution. Anyone who wants to take it for free, and now you have Teach for the UK, Teach for Indonesia, Teach for India, and that's an open source movement where you're scaling the solution and not necessarily the organization. And versus in a pure play capitalistic market, it is all about, I mean, the leadership team has a fiduciary duty to increase the company's value, to increase shareholders' value, correct? So in that way, you have to grow the organization. So it's really interesting to see then from an impact investor or venture philanthropist perspective, do you fund the enterprise or the entrepreneur who was the solution, or, you know, do you fund the organization or do you fund the spread of the solution? Anyone has any thoughts on that?
I guess I have one comment, and that is that based on whatever we've done so far, because of the fiduciary responsibilities, it is largely the organization, and that will come first. When we launch our Tech for Impact program this year, the part of the dilemma, which is the question I posed to you, Calvin, is that should the source of capital be different so that this fiduciary responsibility does not override potential scalability of the solution and hence impact? I don't have the answer to that question. I'm telling you what we've done so far. But going forward, we're trying to find, is there a way that it can be done whereby the scalability of the solution comes before the organization?
Great.
I think it also depends on whether the solution requires some kind of tapping into a bigger global network, right? So for example, it's compelling to say, I'm just going to do Endeavor Indonesia and not link it with the Endeavor global network. But that would be less valuable to the network within Indonesia. So that's why we picked the franchise model, I suppose, versus, you know, like, let's say the TED plus TEDx solution, right? Where it's very, very purely local. The TEDx is local, and then the other TED is global, and there's a separation.
So, for Unlimited, we've gone down the collaborative economy approach, sharing economy approach of saying there's no chance that we could operate Unlimited in Singapore, but we know somebody who does. So that's a combination of the idea and the entrepreneur, because it wouldn't work without an entrepreneur leading it, but it wouldn't work if it's just our idea and we're trying to implement it somewhere else. And this idea of, okay, we have a model, adopt it, but you'll have to adapt it in your country because your country's circumstances are different. Each country is different, and that creates new innovations. Those innovations can be shared around the network. And for us, well, that's the model we're following, partly because we had to, because we had no money, but also we think because it'll actually, in the long run, bring the biggest benefits. It will be a constant stream of innovation and learning across the countries. This business of solution and entrepreneur, though, I think inventors are, they're very nice, special people, but they don't make stuff happen. So I think, you know, just take the steam engine. It was invented in 50 AD, but, you know, it took well over 1,000 years for somebody to make it useful. It's the person who made it useful who turned it into an enterprise and a real engine for change. So I'm very strongly on the entrepreneur, and entrepreneurs will pick up the best model, and they will steal it if they're not given it, and just make it happen.
Any thoughts from the audience? You know, whether in the impact space to make the world a better place, do we care about scaling the organization per se, or do we want to fund the spread of a solution globally? Any thoughts? More open source? More spreading, hands up? More organization scaling? Yes, of course, Linda.
Of something good or something bad, or impact or intent, or scaling up, or the organizations or the intents. I think it's both. We need both. And there's no, I think, one right answer to that, because some organizations needs to be like a movement, and it will be a movement. And I will just have an open source, and I will just build up a Wikipedia that will be available as informations for everybody, or I can be a franchise, and because I need to grow up this kind of models and make it happen in different countries, then I'm more in this kind of person who will raise the two hands every time you're asking these questions, because we are always trying to find the right answer. But my answer is just do it. We just have to do it, and as long as we have a real social impact, no matter how, I'm the kind of person that I'm not asking too much questions. I have a social good impact, then I just stand up and I just start to do something.
Agree? Agree? Yeah, I'm only dramatizing it for the panel, right? Personal take, total hybrid. Yes, you're agreeing, yeah, cool. So maybe can we extend 2-3 more minutes? Is everyone fine?
If everybody's fine.
With that? Yeah.
The break after that.
Anyone has any burning topic for discussion at this point before I end off with one last question? Yes, please.
Structure, you need the company, you need the people who work there in order to achieve an impact. And if this impact is related to a specific product or service produced, then there might as well in the future be other products developed, etc. But then we need to finance this gap maybe between the development of different the product cycles, etc. So you cannot just say I found a project or a product. From the organization as a whole. And also I think every company in itself has a social impact, because it provides jobs. A job is not just one person, but it's a whole family, etc. And I think that all this has to be considered when we consider financing.
I think one role that incubators play in this sector is to match the right financial instruments and the right financiers according to the value chain or the life cycle of an entrepreneur, right? Sati, if you can just close us off, for example, with the story of Ruma and how this is a really great case study on how venture philanthropists and impact investors come in the very beginning of a stage of the enterprise with a social impact and take the riskiest stance during its riskiest time. And once it has proven its model, then the angel investors and the VCs come in at a later stage. And this is also a global trend that is being debated right now or discussed right now, whether different modes of funding should collaborate more to bring an entrepreneur or enterprise through its impact potential.
Yeah, thanks, Grace. So Ruma is an Endeavor entrepreneur, our first Endeavor entrepreneur from Indonesia. And what he does is he's a 29-year-old who had this idea of modernizing the mom and pop shops and enable them to operate like a modern retail channel and enable them to make more money by selling more digital products. And as you know, mobile penetration in Indonesia is almost 100%. And so he started off by selling airtime. So instead of needing to hold, let's say, $100 worth of airtime inventory, all these mom and pop shops are, they can just hold a $10 worth of airtime to sell to their neighbors. So it was just an idea of his, and then he went to business school, and that's where the entrepreneur versus the idea came in, right? So when he was in business school, somebody else took on the idea and it didn't grow at all. So he came back from business school and he started to develop this program, and he got some funding from, seed funding from Grameen Foundation to develop the technology to enable the mom and pop shop to modernize. He also got loan from Kiva, which is a foundation in the US that gives loans for 0%, I think, interest. And so now he's serving 1 million customers. He has 50,000, I think, mom and pop shops under his network, under his Ruma network. Most of them have tripled their income. And a lot of them now have venture out. They don't only sell airtime, but now they take bill payments from their neighbors. They begin to also becoming market intelligence, actually, for the bottom of the pyramid customers. So for fast-moving consumer goods, you know, they do surveys on behalf of these big FMCG companies to tap into the knowledge pool of their real, you know, baseline customers. So all of this, you know, enable them to make more money, more sophisticated. A lot of them now operating like a multi-level marketing, where they start recruiting their own neighbors to open their own, you know, Ruma centers. So it's a really wonderful story. This year, they're just actually fundraising quite a big amount, especially in Indonesia. And a lot of the commercial funder now starting to believe in his model because of the traction that he gets. And so now he's almost 100% fully commercial, has fully commercial investors.
Cool. On that note, we will close with a final word from each panelist, perhaps to the topic, or anyone out there who is a capacity builder. Any last piece of advice? Cliff.
I'm aware I didn't answer a question that was directly asked, so which was about the challenges, how they differ. And I would say they differ so much and so little. The journey of a social entrepreneur, from thinking about it to doing it full time, to taking it beyond yourself, to taking investment, this seems to be a universal human pattern. But the sorts of challenges and opportunities in each country are so different. The thing that I observe most in Asia is the parental pressure to get a safe job. You know, that really is a very, very strong pressure. We don't have that in the UK. But every time that there's a barrier, it creates an opportunity. You know, if there's not much healthcare technology, informatics in Indonesia, well, what a great opportunity that is for a social entrepreneur to come up with good healthcare informatics systems. So usually you end up with this spinning between the problem and the opportunity, and I guess that's the biggest story we'll find.
I think the only comment that I would like to leave you guys with is kind of addressing your question, which is the incubation business is, especially in this sector, is about 5 years old. So there isn't a whole lot of data. There isn't serious track records, and I think it's an open canvas, and so I think taking an entrepreneurial view towards it can make a big difference. So while you might be operating under a large corporate or conglomerate, running it independently, thinking about how incentives align, and thinking about it from an entrepreneur's hat will only enable you to further help other entrepreneurs.
Yeah, for me, I think what's interesting is for people like all of us is that, I see myself as an ecosystem builder, and as an ecosystem builder, it's a really tough job. It's a long haul, but all of us are impatient and want to get there as soon as we can, right? And so the question I always ask myself is, how do you re-energize in this kind of environment where it's a long haul, you're impatient, everybody's impatient, and you don't get to see whether your theory of change will actually get to where you are, for another decade. So if anybody have, advice on this re-energizing, do let me know.
You need to go to Vipassana, right? 10-day silent meditation.
Yeah, meditation is one important aspect. So I would say simply, everyone out there trying to build an ecosystem, come talk to me. Happy to share notes, share opportunities, share capital, who knows what. So I think it is a long haul that we're all kind of on, and sometimes it feels very lonely, and I think you have fellow travelers out there. So.
Kelvin feels lonely, guys, so if you can. Okay, so thank you very much for joining us today, and I hope that was a little bit more less boring than normal panels on purpose, and that everyone can take away something from this panel. Thank you, and I'm sure you can continue conversations with everyone. Thanks.